Well, Cern is here again, and we did give a little teaser the other day, Cern, as something is going really well at BYD, and things are going really well at Tesla. We'll learn about both of those today, but there's this one fly in the ointment at BYD that we'll discuss later, but I'll let you take it over.
Sounds good, Randy. Yeah, minor details, but they might matter. Let's start where we left off on our last show.
Oh,
Here. So this is NVIDIA green Cybertruck. Now, this is all new Cybertrucks now are going to come in this color. I'm here to announce that. This is NVIDIA's done so well, Tesla's decided to adopt NVIDIA green and go with it.
will it have a little plate with Jensen's face on it?
It should. That would be fun. That would be great. Yeah. All right. Last week, we talked about disruption from Tesla versus Amazon. And what I'd like to do this week is extend this idea a little bit further. Like with technology, we make incremental steps. So we do that on this show as well, Randy. We revisit things that we've discussed in previous weeks, try to make ourselves a little bit less wrong.
Right.
Okay. So since last week, I did a little bit more thinking about the potential disruption that could come from what I'm calling Musk Inc.
Yeah.
SpaceX, Tesla, xAI, and it could also include the Boring Company and Neuralink, although
Sure.
I didn't really focus on those two here.
Right.
Okay. And somebody called me out on that on my post, and I apologize. I should include every single business that Musk has.
Well, and yeah, especially I think it's Warren Redlick who always likes to make the highest possible prediction of the future value of each company, believing that at one point the Boring Company could be the largest of all the companies, but then later supplanting that with Neuralink has maybe potentially become the largest of all the companies.
Yeah. And I think recently Elon opened a school, so I could say he's disrupting education too.
Oh, Brian Wang thinks that it'll be SpaceX because of the ability of the handsets, the ability to now be in all the handsets as well as in the computers.
Yeah. So what I did was I took a look at Musk Inc. had the potential disruption to the S&P 500. Now, granted, I didn't do any real rigorous analysis here, other than made some educated guesses.
Sure.
And I determined that about 20% of the companies in the S&P 500, and again, I think I'm being conservative, will experience some disruption from something that Musk Inc. is doing.
Oh my goodness.
Okay, so that's a pretty loose term of disruption, right? Like,
right.
some small part of Apple is going to be disrupted by what Musk Inc. is doing.
Sure.
Same thing with NVIDIA. Tesla has Dojo chips. Now, Tesla is buying a ton of chips from NVIDIA. So maybe NVIDIA benefits more than they lose from Tesla. But still, there's some disruption happening there.
Right.
Right. And I went on down the list. And so 20% of the companies, about 100 companies in the S&P 500, that represents 40% of the S&P's market cap. And again, I think I'm being conservative on this.
Right.
And look at the names, right? I mean, it's all the big tech companies. It's Meta, it's Berkshire Hathaway, right? Their insurance business, for example, could be disrupted.
Right.
And also their transportation, the railway business that they have could be disrupted by Tesla at some point. So Berkshire might have multiple disruptions. JP Chase, if X gets into payments and financial and becomes a bank, then that could disrupt banking.
Well, not if, they are going to.
Yes, they are. Yeah, and as we discussed last week, they're in, what was it, 31 states?
I think so, yes.
Have been approved for their money transfer licenses, yes. Right. And et cetera, Walmart and Visa, Exxon, I mean, go down the list. These are some of the biggest companies in the world that could see some disruption from Elon's companies.
Absolutely.
Here is the top 20 of the index, and I believe 15 of these could be disrupted by Elon's companies, excluding Tesla. I guess Tesla's disrupting itself every day.
Right.
The only ones I think that may not be
Yeah,
disrupted might be.
you shouldn't just rush past that comment. That was such a I understand Elon Musk so much comment by Cern Basher
Yeah.
that you've incorporated his concept into your language. So yes, the idea that a company must disrupt itself if it's going to remain relevant. Love the concept, and I'm glad you brought it up.
Yeah, thank you for stopping me there. That is a good point, right? And that is the key, I think, to corporate survival these days.
Yeah.
And I'm fascinated by, you're familiar with the Andy Grove story at Intel, right? How when they were considering the CPU business, the company made memory chips, and Andy Grove, and I think it was Gordon Moore at the time, said, if the company fired us, if the board fired us and hired 2 new guys, what would the company strategy be? And they determined that it would be to go hard into the CPU opportunity.
Ah.
What they do, they walked out of the building and walked back in as though they were newly hired. And they said, from this point forward, we're going to be going after the CPU opportunity.
Huh.
And Intel, had its heyday on the rise of the CPU.
Yes, yes.
Now,
Interesting.
it's interesting that they then missed mobile, and then they missed GPUs. Like, they missed everything since.
They should have walked out of the building again.
They should have.
Man.
Right now, NVIDIA is riding that same similar wave that Intel once did.
Sure.
Okay, and hopefully they've learned their lessons from that. Right. But it is interesting to look at the companies on this list that may not be disrupted. And maybe I've got this wrong, but I'm not sure how Musk Inc. disrupts Eli Lilly. And that's not clear to me how they get disrupted by Musk Inc.
I've just been barely starting to study Eli Lilly, but I mean, they're mostly pharmaceuticals.
Mm-hmm.
Well, Neuralink.
Maybe.
Neuralink, one of the first things that they're hoping to do with Neuralink is deal with depression.
Yeah. Eli's big driver these days is the weight loss drugs.
Right. So if you deal with depression, you're probably going to deal with weight loss.
Maybe.
In fact, I think weight loss might be on their list.
Yeah.
As a separate item besides depression. Yeah.
All right. I stand corrected. I'll make another red bar.
Okay.
Broadcom, not sure. United Health, maybe the Neuralink helps with healthcare, etc. Maybe AI itself, makes us healthier, and cost of insurance and everything gets disrupted. Maybe. I see Oracle as more of a partner than being disrupted. We learned that Oracle's compute cluster was used to train xAI's model.
Right.
Larry Ellison's a good friend of Elon. So I was generous here and said that Musk is probably not going to disrupt one of his good friends.
I see. There you go.
They'd be viewed as a partner more than, But every other company on this list, I see some big disruptions potentially coming from, Elon's companies.
Sure.
And again, some of them may win more than they lose. So I want to add that caveat in there. I don't see Tesla destroying every one of these companies and taking over their market cap. That's not what I'm saying.
Right.
But the scope of what Elon is doing with his businesses is staggering.
Right.
Okay. All right, a little transition here. Here is a bolt of semis.
A bolt. This is going to be the multiple category, like flock or herd.
Could be. We'll see if it sticks.
Okay. All right.
And by the way, that wasn't me that came up with that. Somebody in the comments of this post suggested a bolt of semis. I thought that was good.
Okay.
A charge of semis, a spark. I don't know. Anyway, there are 23 in this scene outside the prototype factory in Nevada. So there are more and more rolling off the line. You might have to adjust your estimates for the number of vehicles sold this quarter, Randy.
Yeah, I'm not going to really worry about it until they get into mass production.
Yeah. All right. We saw a similar chart to this in our NVIDIA discussion earlier.
Yeah.
In the previous video, I should say.
Yes. In fact, if people didn't watch that video, that was a fantastic one. They should go back and check it out.
Yes. How does Tesla and Elon's companies disrupt Amazon. So if you look on the left there, you can see Amazon's different lines of business, right? They have the online store. It's 55 billion in revenue in the second quarter. They have physical stores. Think of Whole Foods,
Right.
5 billion. Third-party seller services. That's where other people who are selling things can sell on Amazon. That's a $36 billion business. There you go. The Cybertruck bottle openers are amazing. Yeah. Their advertising business, which is one of their fastest growing, if not the fastest growing business, is about 13 billion in revenue. Subscription businesses, Amazon Prime, Audible, etc. That's 11 billion. AWS is 26 billion, and that's also growing quite rapidly. And it's one of the more profitable lines of business. And then other. On operating profit, you can see that of their 14.7 billion, AWS was 9.3 billion of that. So yes, AWS is the key profit driver for Amazon.
Right.
For the cloud computing business. Okay. All right. So how does Musk Inc. disrupt all this? Well, here's a little table with some ideas. And we don't need to read through all this, but the message is that basically every single aspect of Amazon's business could be disrupted in some way by one or more of Elon's companies. Right? Tesla's autonomous vehicles could serve as a backbone for a next generation delivery and transportation network. Right? And using Optimus as part of that as well. If you have AI to AI marketplaces, then the need for physical stores goes down. And the need for traditional sort of online retail also goes down. If your AI is acting as an agent and buying, clothing and toothpaste and toilet paper on your behalf,
sure,
then you don't need those marketplaces, and you also don't need to advertise. So it disrupts the advertising business as well. Okay. On the third-party seller side, not only do AI marketplaces disrupt that, but also Tesla could actually offer third-party manufacturing services. Now, this might be a bit of a stretch, but if Tesla's one of the best manufacturers in the world, and they've got millions of humanoid robots that can put stuff together, then why not outsource your manufacturing to Tesla?
You're really thinking outside the box today. That's a good one.
Yeah.
I like it. I like it.
Now, I don't know whether that would be wise for Tesla to go after that opportunity or not, but who knows? Maybe one day they do. It's probably more likely that companies buy the humanoid bots and deploy them in their own manufacturing or like a Foxconn kind of operation.
Right, right.
Okay. And then AWS needs to disrupt itself, as Jensen has shared. All these data centers need to go from CPU-based to GPU-based. They all need to become AI factories.
Yep.
And Tesla and xAI are building AI factories.
Yeah.
Right now, for their own use, Tesla to train autonomous vehicles, the humanoid bots, xAI to train Grok, but they may find themselves in a position that Amazon once did, where they have excess compute that they could then sell to others.
Well, I think it's Elon's intention. People are having an argument about that right now as to whether Tesla intends to eventually have services that would be going out to third parties, but that sounded like what he was saying in that one call.
Well, the idea of Dojo as a service is interesting.
Right.
And then, of course, all the inference compute that's in all the vehicles and the bots could also be a massive opportunity one day.
Right.
So anyway, so those are just some a little bit deeper thoughts on how Amazon gets disrupted by Elon and his various companies. Okay. So hopefully we shed some light on that, Randy.
I guess, are we going for a new world record in Las Vegas next month, I think, or in terms of a light show?
It's a bit like Mondo Duplantis, who gets a new world record almost every time he competes in the pole vault.
Yeah, yeah.
Moves it up by 1 centimeter at a time, and he gets bonus money every time he gets a new world record. He's very, very clever that way. I think he now has 10, consecutive world records. It's the same thing with Cybertrucks. Just add one more every time.
Just one more.
And get a world record that way. Yep. Yep. All right, let's shed some light on another matter as it relates to Tesla stock.
Okay.
All right. Did you know, Randy, and this is now, I can add a couple more days, I think, to this, but since over the last 936 days, Tesla stock's gone nowhere.
Has that been you that's been posting this?
Dead money, Randy.
You've been
Tesla is dead money.
I've been seeing the post, but I think I've been seeing other people posting your post, or reposting your post.
Yep. You can always look here for this handle to see where it came from. So far, I haven't caught anybody removing that. I'm not sure why they would. I think they would probably want to blame me for posting this.
That's probably right. Yeah.
Yeah. So, this concept of dead money is kind of interesting, right? Like, it's almost as like, the stock's bad or terrible, or you shouldn't invest in it because it's been dead money. I would argue that this is normal.
Yeah.
Okay. Now, in fact, I think you and I have discussed that Microsoft at one point had 14 years
of dead money.
And that many other companies have had periods of dead money way longer than this.
Oh,
Apple, Amazon, Microsoft.
Yeah, especially right after the dot-com bust.
Yeah.
You have lots of companies that are really big today that had dead money years. Yeah. Or money decades.
And even if you exclude that, 1,000 days is not a crazy period of time.
Right. And of course, all statisticians, are liars if they want to be. If you move that back 50 days, all of a sudden you've got
exactly
a different stat. So
yeah, start the line, down here somewhere, and yeah, exactly. So let's zoom out. Let's go back to June of 2010. And you can see I've committed a chart crime here, right? I didn't use a log scale.
Okay.
And that was intentional, and I'll fix that in a second. But Tesla stock has averaged a mere 41% return per year for 14.1 years.
I see.
Okay. And if we fix the log chart problem, and we get this for the stock, right? And you can see a couple of sort of stair steps, right? There's a period of dead money here, although I guess you could say that's trending up. But from here to here, it's pretty flat. It rises to a new plateau, dead money for a long period of time. And then here we are here. So this has been perfectly normal throughout Tesla's history. In fact, this has not been the longest period of dead money that we've seen in Tesla. And
I think we could be pretty, I don't want to give investment advice, but I just have this really strong suspicion that sometime in about the next 4 to 5 months, we're going to see another major upward tick. So that would just be my thinking. Anything's possible. Yeah, not investment advice, but here is that same yellow line. If you just draw that, and because we've fixed now to a log scale, this line is now straight, right? Where it's curved if you don't have a log scale. Yep. And again, not investment advice, but a simple trading strategy is sell the stock when it's above the yellow line and buy the stock when it's below. Again, I think that's horrible advice. But, for those inclined to try to figure out when to buy and sell, that's not a game that I play. Right. Yeah. Okay. I like the NVIDIA green Cybertruck, but this was kind of cool too. Yeah. If you're into aggressive looking wolves on the side of the truck, I'm not actually sure what this image actually means. I'm sure I'm missing something, but it is pretty cool. Hopefully it's not something bad. Yeah. I'm just unaware of. Yeah, right. Yeah. As we often do on the show, Randy, we have product announcements for Tesla, unofficial product announcements. Here's another one of the van. And I apologize, I don't know who posted this on X. Their name is not on here, but I thought this was pretty cool looking, actually. Yeah, not bad, Tesla-ish. Yeah. Okay. And this wouldn't be a complete show without some Cybertruck images. There was a comment on one of the last videos of how, I just must love Cybertrucks. And the answer is yes, I think they're pretty cool. And here they are, all are lined up outside the factory in Texas. Okay. We're transitioning now to our BYD discussion. But first of all, this cartoon. The two clowns on the left, one says, "That's Bubbles. He used to work for the Fed." Oh yeah, it'll be what a. I'm always interested about the future, but the next 6 months, I have to believe, are going to be some of the most interesting times we've lived through.
May you always live in interesting times, Randy.
right.
It's an ancient Chinese curse.
Yes, right.
Yeah. All right, let's talk about BYD. We have made everybody wait now for a couple of days on this discussion, and I'm sure they've been on the edge of their seats waiting to learn about BYD.
Yes.
So first of all, here's the punchline. BYD is not as profitable as we might have thought. They appear to be having some troubles consistently delivering free cash flow.
Yeah.
And year to date, they've lost about $5 billion
Yeah.
free cash flow, despite record deliveries. So let's dive a little deeper and see if we can figure out what's going on.
All right.
Okay. All right. Revenue, 24 billion in the last quarter. That was a 26% increase year over year. It was also a healthy increase from the previous quarter. It was a 41% increase from the previous quarter. But you can see that it's, not dissimilar to Tesla, which they've kind of struggled in recent quarters.
Yeah. And
Right.
interesting, I never thought of it before, but they're very, very close to the same income, gross revenues level as Tesla, at right around 100 billion.
Yep. Yep. 85 billion last year, and then this year they're at 41. I think Tesla's a little bit higher than them, but they're close. Yep. Okay, gross profit, 26% increase to 4.5 billion. This all looks pretty good. Again, they were higher a couple of quarters ago, but this isn't terrible. Right? They're making money.
Yeah.
Okay. Another positive thing, they're slowing their expense growth, which had significantly outpaced revenue growth. Now they seem to be getting a handle a little bit on their expenses, taking a page out of Elon's playbook and cutting some costs.
Right. But they had been pointed out by many to seemingly have just massively too many people, massively too much operating expense.
Yeah. Now, remember this for future charts coming, that this might cause some problems.
Okay.
Okay. So just keep this in mind. We'll come back. And these charts, by the way, are courtesy of the AJ. I forgot to mention that. He does a nice job of summarizing Tesla and NVIDIA and BYD and other companies. So thank you, AJ, for these charts. He did a lot of work to put these together. He saved me a lot of time.
Yeah. All
right. So BYD's cost-cutting efforts have impacted their operating expense margin. They've reduced that, right? Their operating expenses as a percent of revenue were trending in the wrong direction, reached a peak of 17%. They've got that back now to under 12.
Okay.
So that's good. And you can see that they made, some pretty drastic steps in order to get this back down. Right? All right. And so then their operating profit increased 42% year over year to 1.3 billion. And again, looks like they're turning the tide on this. Now, BYD's first quarter, if you recall, Tesla had a pretty rough first quarter too. Right? So both companies have kind of suffered in some similar ways. Right? And both have made some job cuts, et cetera. Okay. All right. And so their operating profitability improved to about 5.4%. Not too bad. Again, for an automotive company, not terrible. Okay. All right. So here's where it gets kind of interesting. About a quarter of BYD's profits come from government subsidies. And in this case, the government actually gives BYD a chunk of money. Now, Tesla benefits from government largesse as well, in a different way, right? We have the zero emission regulatory credits. In that case, the government doesn't pay Tesla money, but they've created a regulatory framework that allows Tesla to earn money from their competition.
Right.
So that's not a subsidy. But now there is the IRA where Tesla does get credits back for batteries and battery packs and so on. And the fact that the consumers get $7,500 off their vehicle, that allows Tesla maybe to charge more for the vehicle than they might otherwise be able to.
Right.
So you could argue that Tesla gets, subsidies as well. from the Chinese government, it's a bit more explicit. It's just, here's a bunch of cash.
Right.
Okay. So, we're guilty, I guess, kind of the same thing.
Right.
But the government subsidies, have gone up quite nicely for BYD.
Mhm.
And the last quarter is $418 million. Okay, so, a decent amount of money. Now, here's part of the problem. And this is why their free cash is negative, or a big part of it, particularly in the last quarter. And this may be why, because they cut a lot of people, their ability to collect revenue may have suffered. We don't know that for sure, but there's something going on here. The collections of the revenue has suffered. Right, the amount of receivables that they have on the books are growing, and so that's hurt their cash flow.
Now that could also be, it could be people, but could it also be the Chinese first half of the year was kind of not that great, and so some of their dealers or other people they're selling to might just be having difficulty paying.
Could be. We don't know whether this is a temporary increase from 17 billion to 24 billion of receivables.
Right.
A big number.
Big number.
Right.
And how much of that, and how much of that is collectible, or how much of that might be collectible? Yeah.
So that'll be interesting to see how this plays out over time. Now, I guess you could say that they had a similar increase before, and here we are today, and they're, having it again. It's just maybe a normal part of the business from the first quarter to the second quarter, and maybe. Perhaps in the future quarters, this will level out or even go down a little bit. We'll just have to see. But it hurts them from a cash flow perspective.
Right.
Okay. And so here's, again, back to the first chart, the Q1 cash burn of 2.2 billion. They added 2.4 burn cash in the second quarter. So about 4.6 billion year to date. Okay. They had positive cash last year of 6.6 billion, the year before 6.3. So the business seems to be hitting some snags. Right. And this is not, similar to last year. The last year was, down, up and down, it was up and down year as far as free cash flow went. This year we've had 2 negative quarters.
Yeah, the other thing we didn't take into consideration, a slowing economy in China during the first quarter that may have continued in the second quarter might also have caused inventory build.
Yeah, and there's also global expansion too, which would increase that.
Right.
Yep. Yep. And so here, this is a potential issue for them. Their cash balance now is down to just 7 billion. And AJ is suggesting that they may need to raise some additional cash if they don't get their cash flows under control. So he's saying without a capital raise, debt or equity, at Q2's cash burn of 2.4 billion, BYD would be bankrupt within 2 quarters.
Well, and I don't know if he goes on to say any more, but if your 7.3 billion in cash would be fine 2 years ago when your revenues were so much lower, but may not be sustainable, even if they just stayed even, may be a problem for them going forward.
That's right. Yep. And then here is their growing inventory.
There we go.
That's caused them to also burn cash. And again, you grow inventory if vehicles aren't selling, or you grow inventory if you're trying to grow the business and you're putting more vehicles out into different parts of the world. Inventory grows that way too, but it's been a significant increase. Okay, so it's been, as AJ mentions, a primary driver of their negative free cash flow.
Right.
And then just to compare inventory for BYD for Tesla, BYD's inventory at 66 days versus Tesla's 18.
Again, they have a dealer network. And there could also, I know I've done this in the past, you could also have a situation where they're starting to load up the dealers because the dealers are going, I can't really take any more right now. And they're saying, okay, I'll give you 60-day terms, or I'll give you 90-day terms. And so there could be these receivable increases could actually be still within term.
Could be. Yep. And then BYD's deliveries reached a quarterly all-time high, 987,000. But if you're selling these to dealers, you can kind of print whatever number you want here.
Right.
Right. But still, you know, nice level.
Mhm.
Now, it's kind of interesting. I didn't fully appreciate this, but their deliveries of battery electric vehicles were about the same as their plug-in hybrid.
Yeah.
They have about a 50-50 split in their business.
Yeah.
And you know, we'll have to see how this transpires over time, but they've grown both parts of their business pretty equally over time.
I think this is, there's a total reasonableness to this, in my opinion, to this hybrid business, both here and in China. As until the battery versions, the pure battery versions, get down into the 18 to 24,000 range of, you know, $25,000 range, there's a business out there for these smaller hatchbacks and other vehicles that the battery, the pure BEVs just aren't in. But as that drops down, I just don't see what happens to I don't see how the hybrids continue to compete long term.
Yeah, I mean, a lot of people have said that hybrids are kind of a gateway drug to battery electric vehicles. I think a lot of consumers are worried about making that shift, and they see the hybrid as kind of a safe way of doing it, and they feel good about that decision, not fully appreciating the risks of that and the complexity of hybrid vehicles and so on, and the fact that the battery doesn't really give you a whole lot extra, and the emissions, you know, are probably 3 times more than what are published, et cetera. There's big problems with hybrids.
Right.
And I think governments around the world will start to wise up to that and maybe not give as much credit to the automakers for making hybrids as they do now. That'll be a big part of it.
Yep.
But we'll see. I mean, it's interesting. This is BYD's, the adoption, like, you know, how many, what percent of the BEVs of the total are, you know, are electric, and it's 38% last quarter. And before it was, you know, about 50. So there's definitely been a shift in their business as the plug-in hybrids have gained share. So yeah, it's a global trend right now. We'll see how long it lasts. And that brings us to the end of our BYD deck. I could have shared a lot more charts. AJ has an incredibly deep dive into BYD. Those are some of the highlights.
Yeah, so if people want, you know, people should follow BJ for sure. It's 𝐤𝐚𝐲.
Yes, AJ, yes.
And on X, and you know, if you want to go take a look at more of the BEV story, and the BYD story rather, that would be great. Yeah, and everybody just seems to really be liking AJ these days. He's getting accolades from Larry and from so many others.
Well, he's doing a lot of work, and a lot of really quality, you know, deep dive work into these businesses, and it's really appreciated. I don't know how he does it. You know, he jokes that people think that he is actually an army of, you know, AI bots or something, and I actually think that he is. No one's actually ever seen him.
Yes, that's true.
I've heard him speak.
Oh, have you?
But that doesn't satisfy me in terms of, you know, is he a real person?
No, not
But
anymore.
either way, he's doing some good work, and we all really appreciate it. So thank you, AJ, if you are listening.
All right. Well, and we also thank you, who you know, we know that you don't actually have to work for a living anymore because you have all this time to be participating in the community, and we appreciate that you're now independently wealthy and able to do this.
It's a lot of fun. I enjoy it. The community has been great, and I've learned a lot, and I enjoy participating, and I enjoy putting my thoughts out there and getting feedback. And I can tell you the community is not shy in giving feedback, and that's great. So thank you to everybody. Keep that feedback coming, and let's try to be less wrong. I like that phrase.
And just in case anybody doesn't know, I'm joking. I don't know if he's independently wealthy or not, but I can tell you that he's still looking for clients. So if you're inclined to change your investment advisor, I don't think you could do much better than looking up Cern Basher, whose name you'll have to go back and find the video. We explained exactly how that came to be. Cern, thank you so much for doing this on every Thursday. Well, this is of course Saturday, probably or Friday when people are watching this, but Thursday morning, we put these videos together, and they are enlightening to me. Hopefully they are to you all as well. So thank you as always for watching me too. And until next time, it's been great talking to you.
Thanks, Randy.